Welcome. Thanks for joining me, Buff. It's good to see you. Saki, welcome to the room already. You're the first one in. So today we're going to do a little bit of a ticker talk with Buff Dormeier, special guest. Been friends with Buff for a number of years now. And actually, when I initially met Buff, he was working at Wells Fargo, I believe. So we'll talk a little bit more about that.
Maybe in Wachovia.
No, I think it was... I don't remember Wachovia, but I specifically remember Wells Fargo. So in any case, let me read a legal disclaimer, and we'll go ahead and get started. Oh, here's Buff. I'll talk a little bit. I figured since it was Halloween today, happy Halloween, everybody. If you're watching the recording, it's probably not Halloween anymore. But I figured that it would be a good idea to start with a joke. So that's Halloween themed. Buff, you may not know this, but in the forum, we usually do what we call dad jokes. So I'm going to go ahead and ask this question, and then I'm going to read a legal disclaimer. If you know the answer, type it in the chat. Buff, if you have any guesses, that's cool too. Why didn't the skeleton go to the party? All right. While you're thinking about that, let me go ahead and just read this. Today's demonstration is designed to instruct you on using Metastock and the company's software plugins. It is not a recommendation to buy or sell any securities, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk in trading securities. Metastock, the Traders Forum LLC, and their employees disclaim all liability for any investment decisions by investors based off the use of the software, trading strategies, or information provided in connection with the companies. Metastock, the Traders Forum LLC, and their employees do not endorse the purchase of a security, nor are they paid for the promotion of a security. No information contained in the presentation should be construed as investment advice or the solicitation to buy a security. So there you go. Any guesses? Buff, do you know why the skeleton didn't go to the party?
Why they didn't go to the party?
Right.
Probably didn't have the guts to show up.
Yeah. That's fun. He didn't have the heart?
I said the guts, but he had nobody to go with it. Nobody to go with him. Oh, I see.
Nobody to go. Very cool. Just a real quick note, if you're watching this on YouTube or in the future, listening to us on a podcast, whatever that might be, I'd encourage you to come join our community. We run a community, thetradersforum.com. You can chat with other traders, learn about the markets. The idea behind it is it's a community of traders to help other traders to hang out, have fun. We do events like this all the time. We'd love to have you there. Membership is free. You can just come in, join thetradersforum.com. So with that, let me talk a little bit more about our guest today. I'm going to do an introduction, just kind of talk about kind of my experience with Buff. Buff, I want to say thank you for coming in today. As I said a few minutes ago, when I started to kind of know Buff quite a bit, it was with Wells Fargo. Can you tell us what your job was right there at Wells Fargo?
So I was a private portfolio manager.
Okay.
For the clients, for our clients, yeah.
You've come a long way since then too. Like you've right now, I know you've kind of you're working for Kingsview as their chief technician.
That's right.
What's your exact title right there?
Yeah, it's chief technical analyst for Kingsview. Kingsview is a registered investment advisor. We're rapidly growing. We have advisors all across the United States. We started the year probably around about $5 billion of assets under management. We'll probably be $6 billion by the end of the year. Seem to be adding about $1 billion a year with financial advisors and a wait list to join us. We're a pretty good company that's rapidly growing.
Now, also some other things I'll talk about is you won a Charles Dow Award.
Yeah. So
go ahead. Yeah, talk about that a little bit more.
Yeah. So so one of the things I like to do is to do investment research, and then take some of those findings and write papers and abstracts on my theses, and then test those theses out and collect them into a thesis paper. And one of those papers, on my volume price confirmation indicator, won the Charles Dow Award. I think that may have been in 2007.
You've also started 2 ETFs. That would
Yeah.
be, I wrote them down somewhere. Do you have the symbols for those? Those are kind of, they use your volume analysis. And
Yeah.
I had the symbols written down, but they're MVFG and MVFD.
Yeah. So I recently wrote a book about volume not being just a piece of data, not just being a leading indicator, but actually being a market factor. And so the book talks about how do you use that factor to not only as a performance driver, but how do you use it to produce successful financial outcomes. And so the the strategies that are discussed in the books are very similar to those concepts in those ETFs.
And what was the name of that book? You might have mentioned it, but I might have missed
the volume factor.
The volume. Okay.
Volume factor.
Okay, just typing that out. Okay, talk to me a little bit about how you got involved initially in technical analysis. Was it kind of the first thing that was it kind of like, did you accidentally stumble into it, or were you doing something else before that? Talk to me a little bit about your background.
Yeah, so right out of college, it was like my second job. My first job, I realized real quick that it wasn't a good fit, and then I went into the brokerage industry, where my father was a broker, and so I kind of knew that industry. Started off on my own, and I was young, maybe 22 years old. I was green and didn't know anything, and but I knew I had to get clients, and so we had back then they had what they called a squawk box, and in the squawk box, this was way before computer programming, and we have the computer access, and really investors back in those days really didn't have a whole lot of access to financial data. So it was in a different era. And so we had the squawk box where stock analysts would come on, and they would tout stock stories about which stocks you should be investing in, and they give you a story, and then I could take that story and dial get the phone and dial up people and try to get them to buy that stock, and that's how you build your clientele. Well, I had a problem in that the ideas that they were giving me were stale. They sounded great. They were a good story, and they had and maybe they had potential, but they weren't moving. But fortunately for me, there was one analyst that was different from all the others. And he wasn't the CFA, but he was a chartered market technician, a CMT. And it seemed like every idea he had seemed to work out really well. And when it didn't, he did something the other analysts didn't do. He's like, okay, let's move on from this. Didn't work. Let's find another idea. And so I needed stocks that moved so that I could buy them and then sell them, and then buy another one, because I got paid on commissions. And so I found that his approach worked for that, and it also worked for the people that were buying the stocks for me. And so that's how I got into it. It was simply pragmatically his method worked where the other methods weren't.
Cool. All right. So from a perspective of that, I think I'm going to jump to talk a little bit about more your ETFs and kind of what the process looks like, just because I'm kind of curious about it.
Mm-hmm.
Let me ask you, right now you've got MVFG and MVFD. How long does it take to create an ETF? What kind of process is involved there?
Yeah, so assuming that you have that the product itself is already designed, functioning, and working, um, it takes about 2 years from when you have a product ready to go through the regulatory processes of creating an ETF. So it's 2 years, and you really need a team of specialists. Unless you're like a really big firm like BlackRock that maybe does launches a new ETF every month. But if you're a smaller firm and don't have all those internal resources together, you find the partners that specialize in each little piece of the that you need uh, to apply and to have a ETF that going from concept to actually being a listed product that anyone can buy, on the exchanges.
So it took you about 2 years. Would you say that you think that's pretty average? Was that longer than normal? Was it shorter than normal?
Yeah, from other people that I've talked, and there's not a huge group, but the ones I have, that's very common. Yeah,
Okay.
that's problem. And so to give you some to give you kind of some stories behind it, as we kind of got to the finish line where we're talking with the SEC and their attorneys and things like that, and I wasn't directly involved with that. Okay, I was kind of I was behind the scenes. I'm not an attorney. I'm not the one that's talking, but but of course I was, relayed in with the discussions. And so like the names became like, like they had all these criteria that you had to fit, and they came back and they said, we don't like the names. I'm thinking, the name, what do you care what the name is? And so and then we got into this discussion about whether the funds, the ETFs, were active or were they passive. Okay, and so and there's different regulations between being an active ETF and being a passive ETF. And if you know anything about these strategies, they are ultra ultra active. I mean we change the stocks every quarter, the positions every quarter. Every week we evaluate a risk overlay that determines what our asset allocation is, whether we're risk on, risk off. Every day we can go and, if we're on defense, can we switch back to offense? It is a super active ETF. However, we applied to be passive, okay, because the definition, according to SEC, of being passive, does it follow an index? That is the definition of being passive. If it follows an index, then it's a passive ETF.
Mhm.
Okay, and these things are, and we have an algorithm that follows an index. So these are indexes. And so technically, even though it seems very active, and it is very active, by definition, it's passive. And so that was kind of the argument, is that, hey, these are passive ETFs because they follow to the T what that index is doing. That index just happens to be very data driven, and that's causing lots of activity to happen with inside the portfolio. And so that comes back to where I was circling in with the names. So they finally said, okay, these are passive. We'll have to change the definitions if for for everybody, if this isn't if this isn't passive, because it just doesn't apply to my ETF. It applies to everybody that has ETFs. So they wanted the name, they wanted the word index included in the ETF, so that that was the concession, the final concession. So
So
we
what
have
are
the
the
name and then the word index at the end to allow investors to know that it's following an index.
So what is the names? So that's all you had to do. You didn't rename them. You just added the word index to the end of it.
Yeah, I mean, I'm giving you kind of the end of the story. There was
For
lots
sure.
of things happening in
For sure.
between, but I had to. Yeah, so the Monarch Volume Factor Growth,
Index.
Global Growth,
Okay.
MVFG,
Uh-huh.
we changed to Monarch Volume Factor Global Growth Index.
Okay.
And then the same with the Monarch Volume Factor Dividend Tree is Monarch Volume Factor Dividend Tree Index. So those are the names that we we gave our concession to.
Okay.
Which was surprising that when I started off down there, last thing I would think that they would want to change would be the name.
Yeah. That is interesting. Was there anything else that during that process that you didn't expect that kind of stuck out to you?
Just a lot of little details about the algorithms and the universe and things, just those sort of things. They were they were they seem to be pretty interested in those type of topics. So
Is
they
it
were.
okay for me? Go ahead. Sorry.
No, go ahead.
I was going to say, is it okay for me to ask about how many assets that you're invested in either of the ETFs at any given time?
So you can that's public information. So you can
Mm-hmm.
just like when you have like your Thomson Reuters, that data feed that empowers
Yeah,
Metastock. What's the name of that?
it's called Zenith. Yeah.
Zenith. So
Okay.
the Zenith, if you type in those symbols, one of the things that it will tell you is how much assets under
All the
management
constituents.
are,
Yeah.
are, are in each one of those funds. They're
Okay.
both right around at this point in time, right around 50 million. Uh, they're
Okay.
and they were just launched here in March, so they've grown quite a bit since launch date. But they're babies right now, and I hope I'm making them into monsters.
Sounds cool. I hope you do too. Let's see. When you say it's ultra active, how long would you say, just as a guess, that you stay in any position in the fund?
Yeah. So in our process, and I'm going to speak to just our process in general here to
Okay.
be compliant. But
Sure.
in our process, the data that we're using is on various time frames, and we make portfolio reallocations every quarter based
Okay.
upon that data. So we're looking at the data, various different time frames, and then every quarter we readjust the portfolio. We re-rank our our once we. So let me just kind of start go
Sure.
back a little bit. So what we do is we start with a whole group of a whole universe of different either stocks or ETFs. Okay, and then we have criteria that screen that list out smaller based upon based upon the algorithm. Okay, once that data is screened, then those final issues that meet the criteria are then ranked by the various volume factor systems, and so we then rank each portfolio every quarter, and then we buy the top names and weighted by their score. So the ones that have the highest score get the highest weighting.
Okay. Yeah. Interesting. Let's see. Let me kind of shift gears a little bit, and I just want to talk to you a little bit about the background when you started to trade in technical analysis. Obviously, a lot of the focus that you do is in kind of volume work and volume analysis. Is that kind of how you started, or kind of was it a more of an indirect path?
Well, I came along at very very early, but it wasn't exactly how I started. So when I started, I just found technical analysis was very useful, and I just was like a dry sponge, just trying to absorb everything it could. But eventually, um, I came across volume, and what I was learning from volume is that volume not only led price and gave you earlier indications, that it also confirmed price, meaning it gave you higher reliability. And so if volume can get me into a trade quicker, and simultaneously have that trade be more reliable, why aren't more people using volume? And so that's really when I made that discovery, that's really how I really dug in. And theoretically, the reason that is that price is just the effect, and it's really volume is the cause of that effect.
Okay. Do you, in your early days, do you have any particular people that you learn from, people that you consider mentors in technical analysis?
When I started out, it was the CMT Association. Right now, it used to be called the Market Technicians Association.
Mm-hmm.
And I was living and learning and working in Indianapolis, Indiana. And there was one technician there, Brad Herndon. He was very, very helpful. But what I was back then, before video conferencing and all that, they would have monthly meetings in New York City with all the with all the brain power of the technicians there. And as a part of that organization and developing my accreditation to be a chartered market technician, I had access to all that. And so what I would do is I would get like tape deck recordings of their meetings and get the pamphlets, and I would listen to those presentations, and then I would go back in the archives and order like all their all their previous meetings, and I would just just absorb all of that. And so I had a lot of people that were that kind of helped me along the way. There was gentlemen that helped me learn how to program and code. Um, John Bollinger was helpful early in my career, even though he was a big name and I was a nobody. There's lots of people like that just came along and lifted me up. And one of the things I'm concerned about, and like we think about society today, is that do people still have those mentors in this digital age, and in this age of wokeism? Can people feel comfortable in that environment where they're you're able to be a mentor, or if you're or able to find mentors? It's something that concerns me, because I had that blessing, and hopefully there's opportunities still in the industry for that.
I think so. But in my opinion, there's a lot of information out there. There's also a ton of noise too. So it's just trying to figure out, how to find the right information and kind of.
Yeah, you're right. A few years ago, someone from I was contacted from someone in Mongolia, and what they were having is a problem in Mongolia with so many people that are claiming to be experts in market analysis, but yet had no credit, but didn't have any credibility.
Sure.
And so, that they came to me because they were familiar with some of my work, and they wanted to help me build some accreditation for them, so that if you're that you had some, so that that you could be an accredited person, as opposed to someone that's just flying off ideas off the shelf without any basis.
Yeah. That actually kind of leads really well into kind of another kind of area for questioning. Let's say that somebody was approaching you as a new trader, and wanted some advice in terms of what they should focus on to get started, what would be maybe 2 or 3 things that you'd tell them is the best play as advice in getting started?
Well,
Assume they know about stocks, but not about technical analysis. And,
well, there's some fallacies that are very common in early investors. One is they're generally either overly concentrated or they're overly diversified. So how do you find that balance in position sizing, and how do you determine diversification? And so, and to break that first thing down is, first of all, there's different layers of diversification. One is position, that's the stock you own. Horizontal would be like the sector you own. Vertical might be the size, the capitalization, where it's located geographically, those sort of things. And then the critical one is the performance driver. What data are you using to determine what your entry is, what your exit is? Okay, so building a diversified system that isn't too overly diversified, but more importantly, more overly concentrated. And then developing a trading plan, which the most important piece of that is knowing when to sell and how to sell. That's the most. It's, as traders are going to spend most of their time trying to research and determine what is it I should buy. But really, the most important decision is your exit. Your exit determines the outcome of the trade. And so what I would do is, how much time are you spending on determining what you buy, and how much time are you determining what you sell? Because what you own determines your performance. Okay, not what you're going to buy, but what's already in there. And so those are the types of things that that I would recommend a new trader to focus on.
Do you find that you trade significantly differently if you're trading your own funds versus like your own personal funds versus your hedge fund, and how so?
So first of all, I eat my own cooking. So
Okay.
I do everything. I really believe in my process.
Mhm.
So I eat my own cooking. But I think what your question is, it hints at a different angle of that, and that is what's appropriate for me appropriate for everyone, and that's not true.
Right.
And two, when you are managing money for another person, when you go from you're risking your own assets to risking other people's assets, like other financial advisors that I work with at Kingsview, or with individual clients and their clients. The level of responsibility is exceptionally heightened. And
For
so,
sure. Yeah. I think for me,
and
I would be. Oh, I'm sorry. I don't. I
no,
don't
go
want to
ahead.
talk to you.
Tell me how it would be for you.
I think for me, like I would be much more hesitant to lose money if it was somebody else's money as
Yeah,
opposed
yeah,
to mine. So
yeah. And you have to be, and so to me, it's all about data and following the data. And for me, when it's to have a defined process and really stick to that process becomes that much more important when you're doing it on the say the professional level. But that kind of reminds me, what your comments are, Jeff, is when I first went from being uh, a broker financial advisor to being a portfolio manager. I was a portfolio manager for a family office. It was, a family office is where a group of people, in this case, it was just one person, puts all their wealth together and has their own asset management firm, but it's just their own money. And I had that same feeling as, oh, I should be more conservative. I should, but that's not what the guy wanted. the guy wanted me to make him money and was very aggressive about it. So I had to quickly learn that for this individual, it was all about results and quick results.
Do you, in terms of trading, obviously you use a lot of technical analysis. Do you look at seasonal cycles, election cycles, Christmas rallies, those types of things? Or those things that have any? Do you believe in cyclicality in stocks? And do you use them as part of the trading that you do?
Okay, so the investments I work with financial advisors and that are out there in the public don't incorporate any of that.
Okay.
But I do, in my role, I'm an advisor to financial advisors. I'm an advisor to clients, their clients. And so those are considerations that I definitely look at when I write my commentaries, when I'm in discussions and dialogues. So it may not be that. So, like, for instance, right now as we speaking, we're in the midst of this election cycle. Okay, that's the presidential cycle is probably the most powerful of all the cycles, and for the most part, if you were to write a playbook on the election cycle, a lot of that has played out the last 2 or 3 years. It's pretty much followed the playbook. So with that in mind, when someone's making like a decision, like, okay, I have new money that is available now to invest. How do I not how, but I should say, but when do I put that money to work? How do I maybe dollar cost average in those cycles and those sort of decision, those types of decisions, I think are very useful in applying that in applying that information.
What's your favorite technical indicator?
Oh, I design my own, and
Yeah, I do know that.
those are available in my toolbox at MetaStock. The tried and true, if I'm looking at following longer term trends, I'm going to look at the VPCI.
Which
Okay.
is the volume price confirmation indicator right here.
Right. Yeah. That's got a couple of different uses. But the key distinction is that its name is into it. It confirms or contradicts the trend. And so you need to use it in conjunction with either the trend of the price trend of the stock or another trend indicator. So those two, combining it with something else, is kind of is a good indicator of itself, but it's much better at using it in conjunction with another piece of data. That's very similar to the VMI, the volume momentum indicator, which does the same thing, but it's confirming momentum as opposed to trend.
Now, how do you, if I'm looking at actually, I'm going to ask you a little bit about PCI. If I'm looking at this, I've got the red line and the blue line. How would I interpret this indicator? What would I use this indicator to do?
So you have Apple. You can see that Apple, like you can see where they had the big acceleration up. Okay?
Are you talking about right here?
Yeah, and you can see that kind of confirmed that price movement going up. So you can say that, hey, I can get into Apple here. Okay, but notice that cross under
You
kind
talk
of,
about right here.
yeah, it
Okay.
crossed, it was going up, then it crossed under and became weak. That alluded to the weakening condition that you saw later. And so at that point, at that point you'd say, well, it just crossed under, it's high, which is a good indication, but it's going down. So at that point in time, if you were considering putting more on, you would be discouraged by those indications.
Okay. All right. Gotcha. And momentum, let's kind of talk a little bit more about this one. Momentum just kind of helps us confirm that trend.
So momentum measures the acceleration, and so you
Okay.
can see here that there's times when these has become extremes, and at those extremes, it tends to if it tends to either be topping out, or it tends to be oversold.
Okay.
And so those, but the main thing is, if you were to kind of just draw a trend line of the momentum, it, like right now, or you can see that trend was going up, and now it is rapidly dropping. Okay, so what was looking good no longer is. Right before that big movement, like if you draw, like, I can't see your chart, but if you go back to where it's red, okay,
Right here.
yeah,
Okay.
okay, so notice that it's red, and that means in our system we're short, okay, and the trend is down. But look at the VMI after that; it starts to go up, okay, all right, and
Mhm.
that was indicating that, okay, the trend is down, but now it's, the momentum is telling us that, hey, it's not just momentum, it's the volume asymmetry of the momentum is saying that now it's starting to look attractive. And so that divergence between the indicator and the trend, which was down, the indicator starts going up, the volume and the trend still going down, tells us that, hey, maybe we're getting ready for that trend to reverse.
Gotcha. All right. Another question that should be very topical for today. Are you dressing up for any particular reason on Halloween?
I am not. I am not dressing up. I kind of wear my own mask.
I'm dressing up as a middle-aged man.
Oh, you are. You might.
Let's see. Um, what do you do to relax? What do you do to kind of when you're not trading?
I don't get much. I don't get much of that, Jeff. um, but so what I'm a runner.
Oh,
I like
really?
to run, and
Are you
when I
are
run,
you a distance runner?
yeah,
Okay.
I'm a I yeah, I used to be competitive. Now I'm more of a jogger, but yeah, that I find that y- I like to be active and engaged, and when you're running, you can process a lot of things. A lot of things go through your mind. You're kind of you get in a kind of a zone, and it's a good time to kind of reflect on things.
So have you done any marathons? Like what kind of distance are we talking about?
When I was young, I did marathons. Matter of fact, I did my first marathon when I was 16 years old.
Nice. Which one was it?
I did the local one in the Fort Wayne, and
Okay.
then later, also when I was 16, a few like 6 months later, I did the Columbus.
Okay. Gotcha.
When I
I
finished, they normally hand you Gatorade, but at the Columbus Marathon, they gave you beer. So I
I
was
did do that
16-year-old
at Amy
drinking
Myers.
beer, not realizing what
That
I
is
was
beer.
drinking.
Yeah, yeah,
Yeah,
yeah, yeah, yeah.
after you finish a marathon, you're really not with it.
Yeah. Oh no, I know. Yeah,
How about
I
you, Jeff?
I used to run, but like I got plantar fasciitis, and so
Uh-huh.
I changed to bicycling. It's just my feet won't let me do it anymore. So
Did you try the golf ball technique?
I do have those. I do have some insoles. I've gotten to the point where they're comfortable enough. Like I
Mm-hmm.
can walk around and stuff like that, but I don't think I'd dare try to do a long distance run. I just don't think I'd be able to do it.
Yeah,
So
if you want to get back into it and you don't want to do all that physical therapy, you can get a shot for plantar fasciitis, a PRP, and
yeah,
it's generally pretty effective.
okay, cool. I
PRP shot.
yeah, I just yeah, it's been like this year. It's just kind of hit, and so I've got the special insoles, and I'm trying to kind of baby my feet back to where I can kind of because I do miss running. Like
Uh-huh.
there's nothing that kind of gives you the endorphins like being on a bike. You just don't kind of get there quite
Are you
as
going
good.
outside and doing it?
I would do a lot of outside running. The last time I was able to do like a half was like 2018.
Uh-huh.
So
What about your bike? Are you doing that on the stationary bike, or are you going outside?
those are typically done. Like this morning, I did spin at the gym.
Uh-huh.
so,
Yeah.
so cool. Well, let's see. Where can people find out more about you? Like, is right now, obviously, the ETFs are MVFG, MVFD. Do you kind of put out any research that people can follow? If so, how can they find it?
Yeah. So find out more about about me, my research. I have a website. It's just my name, buffdormeier.com, buffdormeier.com. And there you can sign up. There's a tab. I think it's labeled newsletter.
I got it spelled right, right?
Yeah, you got it spelled right.
Yeah, cool. All right, go ahead.
There's a tab called newsletter. And there you can get my flash updates. Generally, every week I put out a report that gauges the health of the broad markets. So it gives you my analysis of the broad markets, and where yeah, there you go, right there.
Found it.
Hmm.
Okay. All right, so
And my commentary.
Cool. BuffDormeier.com for that. So Buff, I want to say thank you for coming. I appreciate your spending some time with us today. I had a good time.
All right, I did too. Thank you.
Again, if you're watching us on YouTube, make sure to like and subscribe. It helps a great deal. We appreciate it. If you haven't yet, check out the community at thetradersforum.com. Thank you very much, Buff. Have a good Halloween.
All right, thanks, Jeff.
All right. See you.
All right, take care. All right, bye-bye.